On most line items, Mahindra and Mahindra's numbers beat Bloomberg estimates, and therefore the stock had done so well in the run-up to the results and post the results as well. The questions to the management are about not just what's happened in the quarter gone by, but a lot of announcements they've made in the investor call as well. Dr. Anish Shah joins in to speak about all of that and more. Dr. Shah, great having you. Thanks for taking the time out and congratulations on what appeared to be a very strong quarter. Did it go largely as per what you estimated, not just the quarter, but the year as well?
Thanks, Neeraj. It's great being with you. Yes, things have gone, in fact, much better than we had planned for the quarter and for the year. There were a number of challenges we faced, but very proud of the team. They've really stood up and delivered everything we said and more.
I'm going to start with maybe 4 or 5 auto questions, then go on to the console piece as well. But when I look at the volumes for the auto business, decent numbers out there. Maybe, I think you alluded this in the call as well, that 27% volume growth is no mean feat, but maybe slightly lower because you were waiting for the 300 to get over, 300 to get over. Now, do you sense a return to normalcy in Q1, especially with the kind of response that 3XO has gotten?
We do sense further growth for us on that, Neeraj. 27% growth in an auto industry is very, very strong. And with the 3XO coming in and the bookings, what we've seen, we will continue to see growth. Now, remember that the base for us for F24 is much higher. And what we have committed to is a mid-teens to a high-teens growth in F25, which again is probably 2x the growth that the auto industry, or maybe more than that, the auto industry will see. And we do expect to be able to maintain that growth over the industry, and therefore are confident going into this new year.
Okay, 2 questions on the 3XO as well. Primarily because you've also alluded in the larger vehicles that you don't like such a high waiting period. Now my question is, capacity 8,000-9,000 vehicles, you got bookings in the first 1 hour of 50,000 odd vehicles. So how do you ramp up to meet these kind of demand for 3XO in particular? Part 2 of my question. You haven't spoken about this. I don't know if I should ask this to you, but you've kind of done the unthinkable on the pricing on the 3XO. And you've spoken about a lot of new launches in the ICE side as well, more than the EV side too. Are you looking at even a more competitive price than the 3XO that you've done in the next 12 to 18 months for the newer vehicles, any one of them?
So on the first part, Neeraj, we have capacity for the 3XO. We've already manufactured about 10,000 plus vehicles. And by the time we start delivering on the 26th of this month, we'll have manufactured a few more as well. Our capacity right now is 9,000, but what we also have said in the past is with a little more, with actually a marginal investment and fairly quick time, we should be able to get to 10,500. So a combination of the vehicles that we will have before the booking starts or before the delivery start and what we can then manufacture per month, I think we should be able to move through the bookings at a much faster pace than we could for the XUV 700 bookings, for example, because that was also a little constricted by COVID and we couldn't expand capacity fast enough. So we feel that we should be able to handle this well and be able to manage very meaningful wait times, be able to deliver cars to the customer quickly. And that's been our focus. We want to bring down the booking timeline, and that's what we've been able to do in this space. And then your second question, with regard to price points and vehicles in the next 12 to 18 months, I will seek your indulgence to say we will reveal it at that point in time. Right now, the next big focus is on the 5-door Thar for us, and then post that, the exciting range of born electric vehicles that we will launch.
Yeah. Okay, fair call. I understand that. But I have to ask this to you. 15 vehicles over the next 6 years. That's essentially making M&M present, I would presume, across the value chain, not something that you've done before, a very large car portfolio. So what's the strategy here, and does that cover almost all the price points that you would want to be present in both the ICE and the EV portfolio?
So on that, Neeraj, first clarification is that we will continue to stay in SUVs. We're not going to go beyond SUVs.
Okay.
What you see in that portfolio also is a range of vehicles that will meet the needs of different segments and different consumers who want SUVs. For example, our born electric vehicles will start with 6 SUVs, and each of them are distinctive in their own way. And then as we go forward, we will expand our ICE portfolio as well. Some of it is also vehicles that could be tailored for global markets in certain ways. And that's what will help us build a very strong and robust portfolio that essentially plays upon the strengths that we've been able to show across multiple launches in the past 3 years.
Okay. Thanks for that clarification as well. The other aspect is just breaking it into two. EV investments of 12,000 crores, if I'm not wrong. What are the timelines? How do you fund these? Because if I just did the math of what you say or what you've done thus far on the fundraise and what you might do, it still suggests about 75% of that 12,000 crores to be done by you. So I would love to know how you think about this.
So Neeraj, what we're thinking is that in fact the 100% of 12,000 crores will be from us.
Okay.
What we have gotten externally is 1,200 crores from BII. Temasek has invested 900, or rather, Temasek has invested 300 and will be investing a further 900 per the timeline we had set with them. So that's 2,400 crores that will come in from both of these investors. In addition to that, BII had contemplated investing another 725 crores, and we're going to mutually decide over the next 6-7 months whether that's something that they would want to do, whether it's something that we would need. But essentially, the 12,000 crores is from M&M. In addition, the 2,400 crores that's been committed from both of the investors we brought in. And beyond the 12,000 crores in ICE, in EV, we also have committed to 14,000 crores in ICE. So it's a total of 26,000 crores of capex from an auto standpoint. And over the next 3 years, all of this is going to be self-funded by cash flows generated in the auto business, and which is the reason why we're not looking at external investors beyond what we have right now.
Okay, not for the fundraise, not for the valuation, no external investors, I presume. That's, at least as of now, that's the standpoint.
That's correct, because we believe we've got all the funding we need, and we will be able to demonstrate a much higher valuation in a 3-year time frame as we get a range of electric vehicles on the roads and be able to meet the thresholds that we've promised in terms of conversion of ICE to electric in our portfolio as well.
Okay. Since it's the first interview of the new year, if you will, new financial year, I would love to not just restrict it to autos, though I've gotten enough about autos. Would just want to dwell a bit more on the others as well. Now, my colleague Puneet was telling me that since the time you've come at the helm, M&M, the auto business has doubled revenues, debt has gone down 75%, PAT has doubled in the last 2 years alone. And if I look at the console numbers as well, it's been a very impressive rate. So it's kind of a new M&M. Anand Mahindra kind of referred to it in one of the tweets as well. I would love to know how you think about the next 3-year plan, because I'm looking at the last 3 years and what you've done, and therefore I'm restricting it to 3 years. You can extend it to 5 years as well, or just talk about the year at large.
So on that, Neeraj, I would actually say that M&M has delivered very well in the past as well. And if we look at the time frame from 2002 till 2018, M&M was the best performing stock in the Nifty for 17 years. And this is something I do want to highlight, because yes, a lot of people tell me that this is a new M&M, but I would like to point out that this is in our DNA. We have created a lot of value from the past. And that's something we've been able to replicate in many ways, because from April 2nd, 2020, which is when I got on the board and into a transition into this role, our stock has gone up at least 8 times, probably a little more after what we see today. So it's part of who we are at M&M. Our focus is value creation, and the plan that we have for the next 3 years also focuses on essentially strong execution. Our approach is do less, but whatever we do it really well, and thereby be able to create value for our shareholders.
And clearly auto will not be the only thing out there, because if I pick up a couple of pieces, like for example what Mohit did with the statement at Tech Mahindra's end of the year announcements, but just wondering, it's not an easy road out there, right? Tech in particular, let's talk about that for a moment. We know that the industry is going through a period wherein customer spends or discretionary spends may not necessarily be the best. How does one beat what's happening in the industry and try and create what seems to be unthinkable right now?
I think it comes back to clarity on where we play, how we play, what is the value add we have, and therefore what is our right to win with our consumers or our customers in the Tech Mahindra's case. And we've been able to demonstrate that across multiple businesses in the group. TechM has had various challenges, and we've got a new team in place in TechM. They're very focused on very strong delivery right now and being able to get the margins up to the levels of our peers, which is what we were lagging in the past. We've got the strengths from TechM of the past, which is a very strong customer focus and a business in many segments of the market that has been built very strongly. So I think leveraging those strengths, addressing some of those weaknesses is what's going to help TechM actually get back on track and perform much better. That was laid out by the new CEO, Mohit Joshi, just a couple of weeks ago, and very well received by investors and analysts as well. So we feel pretty good about the path we are on, the leadership that we have there, and the ability to deliver. It is going to be a 2 to 3 year turnaround. It's not going to happen overnight. And that's something we've said of Mahindra Finance as well. And Mahindra Finance is well on its path in terms of that turnaround also.
Okay. What a few people have told me that they need slight more clarity on, and maybe you have provided, but people might have missed it. I have missed it too. Is 2 pieces: M&M Defense and aerospace, particularly the aerostructure business. Would love some clarity here. You've spoken about it a bit, I believe, on the investor call, but would love to hear from you about how do you think about these two over, say, 12 months or 36 months.
So both are very small businesses and both are very different. In defense, we are very careful because we want to play only in very specific areas that are transportation and security related. From a value standpoint, we do not want to get into anything that is what we call on the offensive part of defense. That includes ammunition or any other things with related to that. So in the transportation and security areas, we've been doing a lot with armored vehicles, with security systems for defense, with the ALSV that is being supplied to the Indian Army, and we're very well positioned there today. That's a business that has a lot of strengths along with our trucks and buses division, will benefit trucks and buses, as well as the manufacturing and procurement strengths we have in auto overall will benefit our defense business as well. So this is a business where we will play in a very select manner, but there again, in areas that we play, we will deliver very high quality products at a very compelling price point for the Indian defense and be able to grow that business well. Aerostructures is literally a very long-term business. It takes time to build it because every new part that is built takes 1 to 2 years for getting all the specs right, ensuring the quality is right before we can deliver it. We have graduated to become tier 1 suppliers for the large aerospace companies around the world, and we've been positioned very well in their supplier ecosystem because of the quality we've been able to deliver and the timeliness we've been able to deliver it with. And that is creating a much greater momentum for this business. But this is one, again, that I would look at as a long-term business. It is not going to multiply overnight, and one where we've got a very strong DNA in having built it, and that will help us grow this business successfully over the next decade.
Okay, enough clarity, and thank you for that. I just have one final question. I've done 14 minutes, just one final question. In terms of numbers or the guidance that you gave, and again, correct me if I'm wrong, but 15 to 20% EPS growth, 18% ROE for FY25. Did I miss the revenue growth number, or you do not want to lay it out right now?
That, Neeraj, we haven't laid out because the guidance that we've given for both ROE and EPS is consistent with what we've said over the last 3 years as well. That is a target we have internally, that across the group, we need to maintain 18% ROE and we need to deliver at least a 15 to 20% EPS growth on an annual basis. As I mentioned to our analysts just this evening, over the last 4 years, we've achieved an 84% annualized EPS growth. And what I did tell them was that does not mean that next year's target is 84% as well. So we stay with the 15 to 20% target and we strive to over-deliver.
Well, you're certainly doing that with panache, Dr. Shah. Keep that up. Thanks so much for speaking to us, and all the best for yet another successful year ahead.